everyone. Thanks for joining. Today we're going to be talking about liquidity pools. Crypto Crazy, how are you today?
I'm doing well. Yourself?
I'm doing excellent. It's cold, staying warm in the house.
Yeah, it's been a deep freeze out there. Okay, we'll jump right into it. One of the things we want to bring on this channel is education and awareness, and something that I've been following and looking into investing, and I have invested in are liquidity pools. Pretty much every chain has different DEXs that you can go on. DEXs they are decentralized exchanges. Today specifically, I'm going to go over Solana. It's one of my favorite chains. It's no secret that Solana is one of my favorite ecosystems. Now, people associate DeFi with your typical ROI DApps, miners, and staking, quote unquote staking. Most of the time, it's not even true staking anyway. But that isn't what DeFi is meant to be. Those became popular with the implementation of smart contracts. Some true DeFi or decentralized finance options, in my opinion, is through liquidity providing, true staking, and true yield farming. And now, what's the difference, you may ask? Well, we'll go through that in this video. For the purposes of this video, I'm going to show you 3 different DEXs or decentralized exchanges on the Solana network, what they are and how they work, and how you can find them as well. There's a good tool out there called DeFi Llama, where you can search for all these different decentralized exchanges. The 3 I'm going to go over: Orca, Raydium, and Kamino Finance. First off, we'll start with DeFi Llama. That's the one that I feel. Let me pull up the screen here. It's an easy way to find different decentralized applications that you're looking for. Okay, so here we are on the DeFi Llama main page. Now, it shows everything that has to do with DeFi. You got your overview, your different chains. You can compare them, airdrops that are coming, et cetera, et cetera. Everything's right here. So the easiest way to do it is to go into your chains. From here, you can choose any chain you want to invest in. You got Ethereum, which a lot of people are staying away from because of the high gas fees, especially lately. You got your Tron, your BSC, Arbitrum, Solana, Optimism, et cetera, et cetera. And for the purposes of this video, I'm going to choose Solana. And then once you click on Solana, it shows by graph how well it's been doing, total TVL, et cetera, et cetera. And then it lists in order all the different DEXs on Solana. And then, of course, it shows how they've done, daily, weekly, and then monthly. One of the ones that have done really well recently is Raydium, which I will get into. But the first one I'm going to touch on today is Orca. Full disclosure, I am invested in all of 3 of these. I'm going to show my portfolio in each one to show how they're doing as well. Okay, so the first thing I'm going to go over is Orca. It shows your total value locked, your total volume, and Orca's price currently. If you scroll down, it will show all the different liquidity pairings. Now, what you're essentially doing when you're providing liquidity is you're buying 2 tokens, a pair of tokens at the same time. You can either do a volatile, such as WIF Sol, or you can do volatile stable, such as Sol USDC, or you can do stable like USDT and USDC. So what you're essentially doing is you're providing liquidity. You're purchasing these tokens, which gives the DEX permission to use that money when it comes to their like when people swap tokens, et cetera, et cetera. When you see liquidity on different DEXs, that's where the liquidity comes from. So by providing that liquidity, you are given a reward, a percentage of yield of the fees from those swaps on their swap. And on Orc, if you go up to the top here, you go to trade, and this is their swap page right here. So each time somebody swaps, for example, USDC to Sol, there's a fee involved, and when you provide liquidity, you get a portion of those fees. So going back to the liquidity page here on Orca, scroll down, it has all the different ones. You can see the fee rate, 24-hour volume, the fees that have been generated over 24 hours, and the liquidity for each one, as you can see right there. So they vary. Obviously, it depends on the volume that's coming in on each one of these liquidity pairs. Now, keep in mind, this is very risky, especially if you're getting into like meme token type stuff, like this one here, Bonk and Dog with Hat, WIF. You're getting, this is 24-hour yield here. You're getting 1.135% per day. And then some of them are even higher, like WIF USDC, 3% per day. If you wanted to see what that translates into yearly, you just come up here to the 24-hour, you change that to the 365 day. and that'll change the yield on a yearly basis. The reason I like going to the 24 hours because some of them, they're really high, and you don't know exactly what they pay out per day. Now, keep in mind as well that this does change on a minute, to hourly to daily basis. It all depends on volume coming in, and that's the same across the board for all the different dexes that I'm going to be going over today. So my personal one on this one, this is a little bit of a degen play. I do not recommend following what I am doing. This is not financial advice. This is strictly for educational purposes only. So for me, I threw in $130 into this Myro USDC. Today it has done really well. Actually, last 2 days, Myro has pumped up pretty good. Right now, currently, it's almost 7% in 24 hours I'm earning on this one, which is unfathomable. It's not going to last forever. When you do these liquidity pairings, you can either do, actually, I'll go over it. So I'll go back to here, explore. Let's say I'm going to do a Sol USDC just for purposes of the video. On Orca, you can choose whether to do a full range, which by range, I mean a price differential. So let me go over here to Dex Screener, and I'll show you exactly what I mean. So this is my Myro token that I'm kind of following. Now, this here is just the price of Myro and USDC. Now, I've chosen a range between 21.3 and 12 cents. So as long as price stays within range, then you are going to collect fees, and you're not going to go out of your preferred range, so to speak. I'm nearing the top right now. That's why everything's been doing so well. So I'll go back to Orca. Full range, however, it's a broader range. It's a range which you'll probably not have to adjust or change because what happens when you go out of your range is you stop collecting fees. You'll have to withdraw your funds and then reopen a liquidity pool setting a different range. Now, if you go into custom, in custom, you can change whatever you want the price to be. And as long as the price of your asset is within this range, you'll be collecting fees. Now, you notice down here, the estimated 24-hour yield, that also changes depending on where you have your range. If you have a super, super tight range, you're obviously going to collect more fees, but you run the risk of going out of that range. So keep that in mind. Now, if you wanted to, let's say I'm happy with this range and go to the next step where you choose your amount. Another neat thing about Orca, as opposed to the other ones, is you can, let's say you're doing USDC and Sol, but all you have is USDC. If you click this little tab here, it will automatically give you the amount of Sol you need compared to your USDC, and then once you hit trade, it automatically converts it to Sol for you. So that's kind of a neat little thing that Orca has. You don't have to worry about going into the exchange and then swapping out your USDC for Sol. So that's kind of a neat one on there. Back to my portfolio. So everything's going well. Pending yield is shown here. You can expand the information on your position. It shows your daily, your daily yield. It shows your range and then the current price of your asset. And then it also has information on the pool itself. So fee rate, liquidity, 24-hour volume, and then the tick spacing, which is the spacing of your range. Another thing to note, especially with Orca, well, all three, whenever you do create a liquidity pool, your position is authenticated with an NFT. Now, be very careful here because if you transfer that NFT to a different wallet, then that wallet becomes the main wallet for this position. However, do not burn this NFT, and obviously do not delete it from your wallet. As well with Orca, be very careful. Sometimes you will get a fake NFT deposited into your wallet claiming to be an airdrop. Do not click on that NFT or follow the link because it will exit your position, and the money you have in that liquidity pool will be gone. So just don't touch any of the NFTs. It's all automatic. When you withdraw your position, the NFT also gets burned automatically. So you no need to even interact with the NFT from Orca. All right, and this is Raydium. Raydium's a little bit more involved than Orca, but it's basically the same premise. On the side here, you have swap, just like Orca. Provide regular liquidity or concentrated liquidity, which is what I am in, simply because of the higher fees. So just like Orca, you select a pair that you want, I'll just go to mine, my personal one here. So as you can see, I've selected my ranges, and this is liquidity that I provided, my daily yield. And then if I expand down here, currently I'm earning 206% per year. Now the trading fees is 170% of that, and then you also get a bonus percentage of Ray tokens, 36.63 on this particular pool. And then down at the bottom here, you can see the 24-hour volume, fees, and then the fee rate and liquidity as well, just like in Orca. Just laid out a little bit differently, a little easier to read, actually, I find this one. But same thing with Orca. You choose an asset that you want to provide liquidity for, and then you choose your range, and then depending on what range you choose will determine your APR.
So with this, where it's saying leverage on the top of the screen, will that position change with the amount of risk and range that you've selected?
Yeah, the way Raydium is the only one that really does that. And from what I've read, the way that works is depending on your range, how wide your range is, will determine the quote unquote leverage. Don't think of it as leverage like leverage trading, because you can't get liquidated on these positions. What happens is it goes out of your range. You simply stop collecting the fees. Depending on which way the price goes out of your range, it will all go into one asset or the other. So like I said before, make sure that whatever assets you're providing liquidity for, you wouldn't mind holding either one of those, just in case it goes out of range and you end up with all of one and none of the other, depending on which way it goes. But that leverage is all based on the range that you provide. The bigger the range, the less quote unquote leverage.
Yeah. Can you explain the deposit ratio and how that works?
Yeah, the deposit ratio up here, when you first deposit into the liquidity or provide liquidity, you're essentially providing 50-50 of each asset. And then as the price goes up in your range or down in your range, that will change. So for example, right now, I'm kind of in the middle, not too bad. But let's say Solana decides to go on a pump and it goes toward the upside. As it starts going to the upside, the deposit ratio will switch over to USDC. So if Solana has like a 20% pump and I'm up near the top of my range, Solana will be converted into USDC, and then the USDC side will be higher. I have 1,800 invested in this pool. Right now I'm in the middle. I've collected fees, which are generating very nicely, as you can see, 200% APR. But if this were to go to the upside, the Solana would convert to USDC, and I would have more USDC in there. And then if it did go out of range, I wouldn't exit my position if it goes out of range briefly, because we all know Solana is very volatile. It could come right back down into the range. But if it does happen to go out of the range for an extended period of time, I will withdraw my position and then re-enter with a different range.
And the opposite happens on the downward side?
Downward side, exactly. The USDC will be converted into SOL. And if you go out of range on the downside, you'll have all SOL.
That's a nice little security mechanism built into this DEX, so you're not getting liquidated out of a position. I like that.
Exactly, yeah. You will lose a little bit of your initial deposit if it goes out of range to the downside, but it's, with the fees that you collected over time, that you've had that liquidity position open, they pretty much make up the losses. But you do have to be careful with volatile asset. Like the last one I showed, Orca, that Mara token, it could go to zero tomorrow, and if that happens, then obviously half the position would be wiped out. In my that's why I only have a small position. But there's always risk involved. Nothing is for sure, but the chances of being losing the majority of your position are minimal. And that's the good thing about providing liquidity on some of these pools. So you get the list of the pools all here, and it shows your the potential ROI on the far right hand side of the column. And as I said, some of these volatile ones pay a lot higher, but that could also last, a day or two, depending on the pump. And if it goes the other way and the volatility goes down, then we'll go down as well.
I think it's safe to say that your APR, the higher it is, the higher the risk. So got to keep that in mind, as tempting as it is. Not to jump into these high yield pairs. They are high yield for a reason. So if you are playing in these spaces, you need to be watching it second by second, because it could flip in an instant.
Yes, exactly. Anything that with the high volatility, like for example this Myro one with that's paying 2,200 APY. You're exactly right. You got to keep your eye on them. They're kind of an in and out play. These ones tend to not last very long, and that's why for myself in this pool I'm in the Sol USDC, just because I want to make sure that I'm not going to be going out of range very often. I want to earn as much as I possibly can. And then, as I had mentioned, there's pools, farms, and staking as well. Currently, I believe they only have staking on Ray. Yeah, Ray staking currently. So that is Raydium. Very quick breakdown. The last one I want to go into, which is kind of unique, is called Kamino Finance. Just like Raydium and Orca, when you come on the landing page, it gives you a list of all the different liquidity pairs that you can get into. Right beside it, we'll have the APY, the 7-day APY, 7-day volume, and the total TVL. Now, one thing that's different about Kamino than Raydium and Orca is that the ranges that are chosen for your liquidity pairing are automatically readjusted. So if the pairing does go out of your range, then Kamino will automatically readjust the range. I'll just show you an example here. So let's go to pairing USDT, USDC. So it shows that the volume, the 7-day fees, and then here's the position range. Now, obviously, because these are stable coins, the chances of them going out of range are very, very small. But as you see here, it does show the position range for every single pairing, whichever one you decide. And if it does go out of range, then Kamino will automatically redo that pairing. Since they do the readjusting of the range automatically, there is a performance fee for that. So deposit fee, there is nothing. Withdrawal fee is only 0.1%, which is next to nothing. But the performance fee, they will charge anywhere from 4% up to 9.5%, I believe it is. And that's only on your profit, though. So let's say you have a liquidity pool pairing in for a month. You've earned, let's say, $300. They will only take, in this case, that 4.5% on that $300. So they're not taking it off the entire deposit, which is good. But just keep that in mind when you're figuring out your strategy. So with this, all you do, you can either click here, single asset deposit, just like in Orca. They will automatically convert half of whatever token you are entering into the other one, into the other pairing. So in this case, if I only had USDC, I would enter max, and then it would automatically, as you see down here, it converts it, half of it into USDT to complete the pairing. That is Kamino on the liquidity side. And then they also have a few different things up here. A couple of them are in beta, like multiply. It's kind of like staking, and then you use a multiplier and it gives you more rewards on the staking. Long and short, if anyone is familiar with Pancake Swap, where you either put in that an asset's going to go up or down, and then it's kind of like longing or shorting in a traditional decentralized exchange. But in this case, you're just depositing the one asset, and then you can watch it go up or down. And then once it gets to a certain point, I'll go to Solana, for example. So you enter in your amount, you put in your leverage here using this slider, and then you can see your net value, how much profit and loss you're at, your total exposure, et cetera, et cetera. Now, just keep in mind that this is just like leverage trading on a decentralized exchange or like Bybit or whatever it happens to be. You can get liquidated. So if you choose to go long and your position, the asset goes down and it goes beyond your liquidation price, you will get liquidated. So just keep that in mind. A very high risk in that as well. If you don't know what you're doing, recommended you do not do it without doing a little bit of research and finding out exactly what you're getting into. All right, so that is Kamino Finance in a nutshell. I'll go back to my personal portfolio. I have a small position currently of three. Let me check down here. My initial deposit. Here we go. Okay, and it's a lot of information here, a lot of stats as well, which I really like. But it shows my P&L. I'm up $2.28. Fees earned $1.27, and this position was opened just last night, and it's been doing fairly well. As you can see here, my initial deposit was $538.42, and I am currently at $541. Nothing exciting, nothing too crazy to write home to mom about, but it's a fairly stable pair when it comes to cryptos anyway, Jito and Sol.
Can you claim your rewards at any time with these platforms, or do you have to be in the position for a set amount of time before you claim the interest off of them?
That's a great question. With Orca, you can claim your rewards at any time. Obviously, take gas fees into consideration, but all three of these are on Solana, and gas fees are 0.0002, I believe, currently, less than a penny. So yeah, you can claim your rewards at any time on Orca. You can claim them anytime on Raydium. Kamino, actually, you do not claim your rewards. What happens on Kamino is any rewards that or fees that you've earned on your position get automatically entered into your position. So there are certain liquidity pool or pairings on Kamino where you will also earn rewards on a third asset, depending on what it is. But for the normal ones like USDC and Sol and the one that I'm in, Jito Sol, there are no external rewards. So everything that is earned is thrown back into your initial deposit daily.
That's nice. A daily compound that builds up a position really well when you're staying in it and doing well.
Yep. The power of compounding. It can be great. That's why I decided to try Kamino out. It's a little bit different. There are a little bit of fees, but with that compounding, it saves you from having to go in every day or whatever and claiming those fees and then having to put them back into the position. So you're paying, not that it's a lot, but you are paying gas fees each transaction. Whereas with Kamino, it's all done automatically for you. And the only time you pay a fee is when you actually exit your position.
That's really nice because the main key to generating wealth in any investment is the compounding aspect, and small amounts turn into large amounts very, very, very quickly.
Yep, that's exactly right. Now, that was just a brief overview of all three of those, but hopefully it gives our listeners kind of an idea on how liquidity pools work. So basically, essentially, to reiterate, you're providing liquidity to a certain protocol, a certain DEX. So when anyone does any swaps or anything using their swap page, the liquidity that you provide is what they swap back and forth. And then part of the fees that are generated from those swaps is what pays you. So it's not like zero Ponzi type things. The only time you earn fees is when fees are made, so they're not generated out of thin air, which is also great. Pretty stable. Kamino, Raydium, and Orca, they've all been around for a while, so there's no worries about them collapsing or going anywhere. I mean, there's always risk. It could happen to anything. Just look what happened to FTX. But as far as risk goes in DeFi, they're fairly minimal risk.
If you have any questions about liquidity pools or DEXs that we've covered, feel free to drop a comment in the comment section, and we'll be sure to answer any and all questions that are asked.
Yeah, and if anyone has anything else that they'd like us to go over, feel free to drop a comment, and we will do our best to do some research and put out a video on it as well. I appreciate everybody for watching, and please leave a like and subscribe to the channel. It really helps the algorithm with the likes, and share this with all your friends.
Excellent. Bye, everybody. Cheers.
Take care.